Montreal's real estate market is heating up. The number of property sales has risen every month for more than 3 straight years. Prices are rising and supply is dropping. And that has some people asking, could we see the type of runaway price growth that they saw in Vancouver and Toronto? Well, let's take a look at some of the data. So to start, we need to know what's driving this price increase. What everyone seems to say is that it's the result of economic fundamentals. Unemployment rates are down, wages are starting to rise, and consumer confidence is high. Basically, people have more money and they're more confident about the future, so they're more willing to buy property. Yes, the number of foreign buyers has increased, but it's still around 2% of all purchases. That's a few hundred people a year. And while there's definitely speculation in some parts of the market, it doesn't seem to be driving the region-wide price growth. So what are we actually seeing when it comes to prices? The median price of a single-family home in Montreal, in the region of Montreal, rose 6% year over year in April. On the island of Montreal, it was up 4% year over year. But that needs a little bit more nuance. Across the region, prices rose slightly from March to April, but the price of a single-family home on the island of Montreal fell about $3,000 from March to April. And when it comes to condos, prices are up about 2% year over year. That's pretty important because in Toronto, even when other prices started falling, the price of condos continued to rise about 15%. So as Montreal's property market continues to heat up, the number of active listings is falling. That means supply is dropping. When it comes to condos, though, supply is actually rising. There are about 9,600 units on Montreal's condo resale market, about 1,900 new condos, according to the Canadian Mortgage and Housing Corporation. Well, that's down from 2015. It's up from a couple months ago. And you can expect to see a lot more condos coming onto the market. The number of construction starts, that's the number of housing projects that broke ground in April, reached a 20-year high. And that was driven by condos and purpose-built apartments. And even with the decline in supply, the number of months of inventory, which is a real estate industry term to measure supply versus demand, basically, was 8.5 for condos in Montreal in April, and was about 6 for single-family homes and plexes in Montreal. In the Toronto area, supply or months of supply was 3 months for single-family homes and 4 for condos. That's not to say that supply isn't limited for certain types of property in certain parts of the city and certain parts of the region, but not for condos. So it's not just taxes that took the wind out of the sails in Toronto and Vancouver. Mortgage rates are rising, and even though the Bank of Canada kept the interest rate steady earlier this month, it's expected to rise later this year. And mortgage rules have changed as well. Now buyers have to go through a stress test to prove they can pay the expected higher mortgage rates. Well, that means that you probably might not be able to get as much house as you'd wanted to get. Even though we heard a lot of talk about speculators, both foreign and domestic, in Toronto and Vancouver, a lot of the price increase was driven by cheap debt. Canadians were able to spend more on houses, and because prices were rising so fast, taking on that debt seemed more reasonable. But now that credit is becoming more expensive and borrowers have to prove they can pay for that, things are starting to slow down. And that's as true in Montreal as it is in Toronto or Vancouver. And while Montreal is doing better economically, on many economic measures, it still lags behind other cities like Vancouver and Toronto. Wages are lower. Vancouver has a much lower unemployment rate. And Montreal also has a higher percentage of renters. It's the highest of the 35 largest metropolitan areas in Canada, about 10% higher than Vancouver, about a little less than 10% higher than Toronto. And that has an effect. Lower rents, especially when the stock market is outperforming the housing market, definitely disincentivizes buying property, either as a home or an investment.